Hello and welcome to another video. Today we'll be looking at a live trade. Um, we'll be trading with Grail Edge strategy, advanced Grail Edge strategy. Advanced Grail Edge strategy has to do with you setting pending orders at a particular point on the chart, and then you expect price to trigger the pending orders. Afterwards, you set your take profit stop loss, and then with a particular hedge spacing, you set your pending orders, your buy stop, sell stop, okay, as the case may be. And then at the end of the day, you make some profit, and then you try to break even with the other side of the trade. So let's just start with it. So I'll be setting pending orders here, okay, and I'll be setting pending orders here, okay. I'll be having buy stop and then sell limit here. I'll be having buy stop and I'll be having sell stop and buy limit here. So the first point of call will be here 1100300 buy stop sell limit. Okay, my buy stop will be 1003000. That's my buy stop. Okay, and my sell limit will be at a point 1003000. Okay, so afterwards I'll be setting sell stop here and buy limit there 998000. Sell stop and buy limit. Okay, I'll be 998123. Okay, that's my sell stop. I'll be having buy limit at that point. Buy limit at 998123. Okay, so that's it. I have 4 pending orders. Okay, I have the buy stop and the sell limit above, which is around here, and I have the sell stop buy limit below, which is around here. So either the levels, the pending orders here get triggered first, or the pending orders here, okay, or the pending orders here gets triggered first. Whichever gets triggered first, I'll delete if this gets triggered first, I'll delete the orders here. And if this gets triggered first, I'll delete the orders here. So I've got 1008000 mark. I've got 1003000 mark. 998,000 mark. The next will be 993,000 mark. I got 1013,000 mark. So it's either the 3,000 mark, the 8,000, 3,000, 8,000 mark. So whenever price is between, you set pending orders above and below. Whichever gets triggered first, you delete the untriggered pending orders, and then you start to set take profit stop loss for the opposite running orders. Then you set buy stop, sell stop for the 2 contra orders. Okay, so we're gonna wait for which side will get triggered first. So I'm starting with the lowest lot size, which is 0.0014 volatility index 75. Okay, and my minimum balance is $304.30 for the starting lot size 0.001. So if I have $600, I'll be starting with 0.002. If I have $900, I could be starting with 0.003. Okay, so for every $300 you can use 0.001 as a starting lot size. So if I'm going to hedge my positions, I'll be hedging with 3 times the lot size of the starting orders. Orders lot size is 0.001. So my hedge lot size will be 0.0003. But if my starting lot size is 0.002, for instance, then I'll be hedging with 0.006. And if my starting lot size is 0.003, for instance, I'll be hedging with 0.009. So my hedge is going to be my first hedge. Okay, so after the first hedge and the range continues, then I'll introduce another hedge, which will be my second hedge pending order. Now, if the second hedge pending order gets triggered and I do not have break even, then I can go ahead and introduce the third hedge pending order. I'll introduce the third hedge pending order if I'm unable to decide which direction price will go. But if my first pending order gets triggered, I'll look out for which direction price may likely go. If I'm unable to tell, or if I'm unable to make up my mind where I feel price will go, then I'll introduce the second pending order. With the second pending order, I'll look at the charts and try to identify the direction where price will head to. Okay, and if I'm unable to identify with the 2 hedge trades triggered, then I'll bring in a third hedge trade. Now, my first entry lot size is going to be 0.001 for $300. That's what we have for all the pending orders. Okay, as soon as any of this gets triggered, I'll delete. If this buy stop gets triggered, okay, the buy stop goes with sell limits, so I'll delete the sell stop and the buy limit, then introduce hedge. I'll be having this buy stop will turn to buy order, sell limit will turn to sell order. So I'll be hedging the buy stop, which is now a buy entry, with a sell stop. I'll be hedging the sell limit, which will now be a sell entry with a buy stop. Of course, I will have deleted these two. But if these two gets triggered first, that means I'm going to delete the sell limit and the buy stop. Okay. But for now, price is ranging. And after the range, we expect price to break out into one direction. Price can break out to the upper direction or to the lower direction. As it is, price is attempting to go up, but we can't really tell until we are on a 5 minutes time frame, until the current 5-minute candle closes. But for now, price is attempting to go up. If price goes up, it's going to trigger the buy stop and the sell limit above. Then I have to delete the sell stop. I have to delete the sell stop and the buy limit. And then I'll set pending orders for the with the 4,000 point hedge spacing. I'll set pending orders around the 2 entries. Okay, for my edge trades with 0.003 lot size. Of course, one of the two, I'll be setting take profit for the two, and one of the two will close in profit, while I'll leave out the edge pending order for the other running trade. So I expect after this two gets triggered, I expect to set, okay, I think I have a trigger. Now I'm going to delete these two. I'm going to delete these two. Okay. So this side of the pending order is gone. I have this side left. I'll delete this shape. Okay, I have these two sides running. So I'm going to set take profit. I'm going to set hedge trades for the two. First is a sell trade 1003094.11. $3094.11. So I'll be having for that sell trade, I'll be having for the sell trade, I'll be having a buy stop. For the sell trade, I should be having a sell stop, a buy stop rather. Okay, for the sell trade, and that'll be at 1007.014.11. Okay, that's for the sell trade. Okay, now for the buy trade, I should be having a for the buy trade, I should be having a sell stop 1003254.11. That's the buy trade. The sell stop will be 99,99334.11. That's my sell stop. Okay, that's my sell stop. So I can close this. Okay, now that I've closed that, I'll have to delete the buy stop. Okay, I've deleted the buy stop and I've closed the sell stop in profit. The take profit ordinarily should have been 2,500 points, but I was able to close it with 2,600 points thereabout. So I'm going to set take profit for my buy trade, but if my buy trade goes back to the original position, I can just close it. I'll have made profit at the end of the day, but I'm not going to wait for that. I'm going to set the take profit for the buy trade 2,500 points. That will be 1005754.11. And this the stop loss. Okay, sorry, let's look at it. The buy entry is 1003254.11. Okay, I'm using my Excel on the computer to compute the levels. So the take profit for the running buy trade will be 5754.11. Okay, and the stop loss will be 996,554.11. Okay. All right. Now for the sell stop, they take profit. I have to set the take profit and stop loss. For the sell stop, the take profit is 996,754.11, and the stop loss is 100,5954.11. Okay, so I'm just gonna wait and see if the sell stop will get triggered. If this is gonna get triggered, then I have to hedge. This is my first hedge. If the first hedge, which is 0.003, gets triggered, I will introduce a second hedge around here. Okay, which will be 0.008. Now, if the second hedge gets triggered and I do not know where the direction price may likely go, and I'll introduce a third hedge, which is 0.024. So it's first, the starting loss is 0.001. The first edge is 0.003, which is what we have around here. Second edge is 0.008. Third edge is 0.024. Third and final hedge is 0.024. That's the lot size. So if this pending order gets triggered, then I'm going to be looking out for I'll be looking out for break even. But if price as it is starts to go back to the buy order and gets above it, I'll just close. Then I'll have made some profit without waiting for break even. Remember, I had buy and sell entry orders running, and I've closed the sell in profit. So I'm expecting two things to happen. Either the sell stop gets triggered, then I have to look for a break even, or price goes back up to where it was coming from, then I'll close this running trade in profit, in a little profit. I will have made some money without having to trigger my pending orders or go into the use of Grail Hedge strategy. My starting balance was 304.30, and now I've closed the sell trade, the triggered sell limit, which became a sell entry order. I've closed it in profit to $0.68 or $2.60 or 68 cents, and I'm expecting my running buy trade to close either in profit or trigger the sell stop. Then I have a range where I'll expect break even. But if price gets to where my buy order is and moves above it, I'll close the buy order and the trade session will be over. But if price drops below and triggers my sell stop, I'll introduce a second hedge, which will be 0.008 around here, and then expect price to drop further to give me break even. For the take profit above, I have 2,500 points. For the take profit below, I have another 2,500 points. For the edge spacing, I have a little below 4,000 points. Now, for the sell stop, for the stop loss above my TP here, I have 200 points. And for the stop loss, below my TP around here. Okay. Stop loss below my TP around here. I have another 200 points. So what am I saying? My buy entry is at 1003254.11. Okay. And my sell stop is at 999334.11. So the stop loss for my buy entry will be 200 points below the TP of my sell stop. Now 200 points below the TP of this particular sell stop. The TP is 996754.11. So reduce that by 200 points. You have, like you have here, the stop loss here is now 996554.11. So you do reverse the case for the TP of my sell stop. Okay, the TP. Oh, now I can close this trade. Price just gotten above the buy entry. If it continues to go above it, just gonna close the trade. So as I was saying, the stop loss for the sell entry will now be 200 points. The TP of my buy entry, which is 1005754.11, 200 points above it, will now give me my sell stop here, my stop loss here, which is 1005954.11. So that's how to get your stop loss. Of course, your TP for either entry is 2,500 points. Okay, the stop loss is just going to be for sell TP 200 points below it will be the stop loss of your buy entry. Now for buy TP, okay, 200 points above the TP will be your sell stop loss for your sell entry. I think we have a swing low on the screen. I have a swing low on the screen, so I expect price to continue to go up. Spread price to continue to go up so that I can close this trade without having to wait for break even. Let's see what happens. Let's wait for it. I already made 2.68, so I can as well decide to close this. I can decide to close this particular trade. 2.68 minus 0.64 or 0.55. I mean, I made some profit if you look at it, but I want to wait for price to get I want to wait for my drawdown to get to zero or in profit before I close the trade, and then the session will be over. Okay, I think the session is about over now. Okay, if I close, yes. Okay, the session is over. So what I will do is to delete the pending order, and I've made some profit without incurring loss. So if I'm going to take another set of trade, I will allow price to get to around here. Okay, then before I will set my pending orders here and here. Okay, or I'll allow price to get to the middle here before I set my pending orders here and here. So either of the case, price must be at the middle of the psychological levels. My psychological levels are a 3,000 max, 8,000 max, 3,000 max. So that's the way the advanced Grail Edge strategy works. Okay, don't forget to subscribe to the channel so that you get to see more live trades on how to use the advanced Grail Edge strategy. It's the ultra, I call it the ultra Grail Hedge strategy. Okay, ultra evasive Grail Edge strategy. Okay, it's able to manipulate and evade any form of loss with the use of pending orders, with the use of buy stop, sell stop orders, buy limit, sell limit orders, and with the use of hedge with higher lot size so that you can recover, so that you can break even if your trade goes into loss. So like I said, don't forget to click subscribe button. If you like what you just saw, click the subscribe button. Okay, also click the like button for the video. Drop your comment below the video, ask question where necessary, where you seem not to understand some part of the video. Drop your question below the video. Hit the thumb button or the bell button. Hit the bell button below the video so that you'll be notified when we post another live trade video for you to understand how to use the ultra evasive Grail Edge strategy. Okay, you can also go to our website www.benefxtrader.com to learn more on how to trade forex and volatility index. You can also visit another website of ours, fxfables.com. And don't forget, don't use this strategy on a live account. Make sure you use it on a demo account so that you understand how to use the ultra evasive Grail Edge strategy before going live. All right, till I come your way next time, it's bye for now.